Okay, so greetings, happy Thursday. Happy Thursday. So we are currently taking a look at this trade. I just want to jump right in here because earlier when we were on TikTok live, we had a really funky M. Okay, we had a really funky M formation that popped up, and we decided that that trade was a quality trade to take based on 127. So we're about 13, 15 points out from the current of being in drawdown, right? Or how to, one second, how to manage your emotions when you are in drawdown, because drawdown we know is a part of, it's a part of trading. We don't like it. I was telling them on live, I said I do not like drawdown. I hate it. I hate drawdown. I don't like the feeling of it. I don't like the look of it. We don't like drawdown. Drawdown is bullshit. Let's just be honest. Everybody knows drawdown is bullshit, especially when we have a solid trading idea and we think that the market is going to go up, and then they say, well, nope, we're not going to go up, we're going to go back down. That's bullshit, because I mean, keep it honest. Let's keep it honest in the chat. I want to keep it honest in the chat. Drawdown is bullshit. It fucks with your mindset. It fucks with your mental. You have a great trading idea, and all of a sudden the market says, oh no. Okay. So we were watching this to see if it was going to set up and go higher. This also is another candlestick formation that looks to be like an engulfing candle. We had the market pull back and close back above these moving averages. Currently, the market just pulled down over 60 points with this one candle alone. Okay. Now, I wouldn't be surprised to see this mug go right back up. I would not. I wouldn't be surprised, because this yellow level, which we identify right here, was a level that we were interested in during the live with TikTok. Okay. So let's talk about the trade over here, because this trade was also very, what I like to consider it, when you're in drawdown, the best word I can give you is uncomfortable. It's very uncomfortable to be in drawdown. It's very uncomfortable to be in a trade where you have a bias and the market is making its ebbs and flows to determine if it's going to agree with you. It's one of the things that I just, honestly, I hate it. Let's talk about it. Let's talk about drawdown. I hate it. If you hate it too, put me in the chat. I need to see if I'm with my people. I need to see if we're all in this together, because the idea of the market going against you when you have a solid signal, you have a solid price action signal. When that happens, it does something to your psychology. I get it. Trust me, friend. I get it. On the day, we are net $269. So we're in the red about $269, which is about 1%. Okay. Now keep in mind, that's on the whole overall day. There were some trades in here where last night, getting into a sell around this area, we currently be in profit approximately 400 points. Okay. Getting faked out of a trade is one of the most frustrating things ever. And so in this live, what we're going to do is we're going to talk about some of the tips that we have to give you on how to not get faked the fuck out of a trade. I'm just going to say it that way. Okay. Here's the thing. Don't believe a word I say. Don't believe a word I say. I can only come from my experience. It does not make it right. It does not make it wrong. It just simply makes it my experience. And so with that being said, what I need you to understand is that the market is going to do what it's going to do. All right. It's going to do what it's going to do. And when we got into this trade here, this one with the gray box, when we got into that trade, we can see where it was very uncomfortable. Drawdown, the word I like to use is uncomfortable. Uncomfortable. Okay. Uncomfortable to be in a trade here and to have the market come and enter into our zone, our zone of trading here, where this is our red zone. Now, I know on the chart is gray. I know on the chart is gray. This is a red zone mentally. We don't want to see the market go into this area. So one of the things that I would like to do is just go over some of the information that we use to help us and guide us through those trades so that we don't get faked the fuck out. Okay, let's talk about it. Let's talk about it. Okay. The idea here is when you do have a solid, when you have a solid trading idea, okay? My best piece of advice, depending on how you got into that trade, if the market is still moving, then, my friend, what I need you to understand is that your trade is not invalid. And I know, let me just say this. I know, I get it. That is not the most comforting thing to hear, because being in drawdown for 60 points, especially if you're over leveraged, especially if you're doing the wrong thing, it is not comfortable at all. It feels like crap. Let's be honest. Can we be honest? Feels like crap to be in drawdown. All right. Now, I told you that we were going to go over some techniques that I personally use to deal with drawdown. One of the concepts years ago that we would go through in our training was the art of crashing. Practicing the art of crashing. Practicing the art of experiencing the emotions that we do not want to experience on purpose, so that we neutralize our nervous systems around what the market is going to do anyway. All right. So we're not able to control the market. We are not able to tell the market what to do. All we can do is govern ourselves accordingly in the market and know that if we have a plan, for the market, or if we have an idea about where a trade can potentially go, if you practice the art of crashing, if you practice the art of seeing the market mentally hit your stop, this may sound counterproductive if you're not familiar with this. If you practice that art, then, my friend, you will understand that sometimes these things happen. Okay. Sometimes these things happen. And you can see on here the precise levels that we had to denote where we would be stopped out. And you don't have to take my word for this trade. We did this on TikTok Live earlier. We were hanging out and we had some fun on TikTok Live, just going over these trading ideas. We waited. We saw all of this during TikTok Live. We saw all of this. And when I was getting into this trade, I told the people that were watching, this is a B minus. A second. So with that being said, the market did go up into our red zone. After, look at this. So we had a candle, it gave us a little confidence right here. This one, ooh, we back at our entry. This one was all the way up here. Keep in mind, the candle was all the way up here. Pull down. All right. Then we was like, oh, okay, cool. Right. These are the emotions that you typically go through as a trader. And if you don't go through these, then you're not a real trader. So now you're like, okay, well, I guess we're going to go back down. Right. You're seeing this unfold as it unfolds. Now, once you're in that trade, you had a couple candles here that went down. What did the market do? It started to reverse again. Okay. Started to reverse all the way back up into our red zone. Okay. Now, after that, look at this massive candle. This was, and I remember when I was looking at this happened in basically 1 minute. This candle here basically painted this way in 1 minute. All right. After that candle painted, we had the market go down a little bit more, pull back up. So one of the things I always tell people, trading fatigue is real. Okay. You getting out of a trade because you're tired or because the market is quote unquote playing on your emotions, that's a real thing. it feels personal when you're in a trade and the market pulls up, pulls down, pulls up, pulls down. You're like, golly, I should have just got out. I should get out, right? Those are the thoughts that we have. I should just get out. And so in knowing that, again, the number one tip I can give to you is practicing the art of crashing, practicing the art of handling your emotions and knowing in your mind, visualizing in your mind what it's going to be like when the market hits your stop. I know it sounds counterproductive. You're like, what? T, why would I practice that? I'm telling you, this is an edge, or this is a part of the edge, knowing that, yo, no trade is guaranteed. No matter how many times we see the M formations, no matter how many times we see that play out, no trade is guaranteed. Okay. Now keep in mind, when we open this trade, technically, overall, if we would have held those positions, we did close out at this yellow level because the market did pop up here. But keep in mind, you could have left a runner, currently be approximately 200 points in profit, 50 points for any given trade. And so when I have my downtime as a trader, what I am doing is mentally seeing the market go into my red zone and also the market stopping me out. Okay. Now, what that means is if I'm uncomfortable in that practice, or if I have any kind of emotions in that practice, I need to keep practicing that over and over and over and over again. Now, let me give you a major clue, because typically speaking, the hardest thing about surviving drawdown is being over leveraged. If you are over leveraged, you probably would have closed this out. And I get it. Small lots are not sexy. Small lots are not sexy. I get that. However, if it's going to allow you to let the trade do what the trade is going to do, let's lower the lot size. So that's the second tip, right? The first tip is practicing the art of crashing, practicing the art of seeing the move go against you so that you can properly deal with your emotions. It's going to happen. The market is not going to agree with you always. It is going to happen where you have a trade that goes into what you consider to be your red zone, or goes into your stop level, or does this XYZ. It's going to test your patience. And so first things first is we want to practice handling our emotions around the idea of the market stopping us out, so that we know it's a part of the game. It's not personal. It's a part of the game. No two trades are alike. No matter how many times we've seen this pop off, no matter how many times we've seen this do this, we know that every moment in the market is unique. Okay. The other thing that we're going to pay attention to is making sure we're using proper risk. I'm telling you, 9 times out of 10, if you're getting faked out of your trades, is more than likely you're over leveraged. More than likely you have too much dip on your chips. You got a little too much dip on a chip. Okay. And so I encourage you to consider lowering your position size. Lowering your position size to see if those same emotions come up in the next trade that you take. See if you're nervous, right? Because if you would have put a standard on here, depending on what size account you have, I don't know what size account you have. If you would have put a standard on here, and maybe you had, let's just say you had a $10,000 account, this right here alone is a 42 point window. Okay. So it gets really uncomfortable to start seeing the negative. So what I would encourage you to do, you don't have to take this at all. I know you're an adult. What I would encourage you to do is at minimum, cut that in half. Cut your position size in half. If you've been frequently getting stopped out, cut your position size in half. Okay. Do that for me. Do me a favor. To survive drawdown, your next trade, you're going to cut your position size in half. And then you're also going to practice the art of knowing exactly what the number, the dollar amount, know exactly what that is. Whatever the point value is, know exactly what it is, because 9 times out of 10, if you're getting faked out of your trades, you're probably a little bit more focused on the money versus the trade. Okay. And so I'm walking back from the coffee shop that's near my home when this trade is going on. I wasn't getting out of this trade just because the market is up here above my entry. Okay. We have a plan on this chart for a reason. And so we have to follow the plan. Now, going back to it, my way of trading means that the market has to close. It has to close before I exit the trade. Okay. And so let me give you an example of that here, right? Let's just say, for instance, we thought the market was going to go up, because it did look like it was going to go up. There's a little bit of a W here. A couple things about this that I don't like, a couple things about it that I like. Okay. I like that it's right here at this yellow level. We saw it pop up from there. That's interesting. That's good. We like that. This candle here, nice strong body. We like that. Now, when this candle opened, didn't go down at all. We like that. Okay, we like that. Boom. Went straight up to the 20, pulled off, rejected. Now, this candle here was a test. They tested this yellow level. And if you would have seen this while it was down here, now keep in mind, yes, you would have gotten stopped out eventually, but imagine saving yourself, let's see, about, let's just say, let's call it 85 up to, let's call it 85 to 30 points. Okay. You could have gotten back, quote unquote, 30 points to your profit or to not being stopped out of this trade. Okay. If you entered here and you saw this go down, you're like, oh man. And then you saw this one go down again. Right. So if you're over leveraged, you're probably closing this trade out down here. All right. Now, again, obviously, if you would have taken this trade right here, you would have gotten stopped out. Now, this is also another bullish, what looks to be a bullish engulfing candle. Now, keep in mind, these are strong technical signals. This is a strong technical signal, to be honest with you, right? We know that the market just popped up from here. So that should be a strong technical signal that this candle is that bullish, and we had it close back above the 20 moving average. Okay. And so let's just say, if you don't know how to enter, you entered on this one and then boom, stopped you out again. And so in taking these entries, one, knowing that patience is everything. Do not force it. Do not rush. Do not be rushed by the market. Don't allow the market to control what you do when you do it. Okay. When you take these positions, know exactly what you're risking before you even enter a trade. Know exactly what that amount is. If it's 45 points, great. If it's 50 points, great. If it's 75 points, great. What I would also encourage you to do is to know the dollar amount. Okay. Know that dollar amount, so that if you are in a position where you are distracted by the floating equity, you will mentally know that, okay, let's just say, for instance, it's a 75 point stop. You're using $1 a point. Boom. Right. It runs 75 points. You know that loss would be about 75 bucks. Okay. So if you start seeing the market pull back and now you're negative 60, now you're negative 55, so if you're negative 55, are you closing it out? You're closing it out when you've already said, yo, for this trade to be invalidated, there's a 75-point window that I'm willing to allow the market to breathe to determine if it's going to continue or if it's going to reverse or whatever the direction is, depending on what you're trading, right? So you have your window. You have that 75-point window, 45-point window, whatever you want to use, 50-point window. Of course, this is the NAS100, so we're talking big pips, okay? Once you have that, you're going to mentally practice knowing what it looks like if the market stops you out. Knowing that 75 points, okay, you're trading at $1 a point, you get stopped out at 75 points. How's that going to make you feel? How's it going to make you feel to see the $75 loss?